All right, good morning, everybody. It is Cowboy. It is 6:30. It's actually or 8:30. I mean to say 8:33 a.m. EST. So the market opens in about 1 hour, and we are right at the end of the year. We have what is it? What 4 days left? So plus we only have 1, 2, 3 trading days left in the year. Today is a Wednesday, if I'm not mistaken. It's kind of a weird week because of Christmas and all that. But with today being Wednesday, yeah, 3 trading days left, I think, in the entire year. So, and this is, we've talked about this, talked about it last week. Trading at the end of the quarter is pretty tricky, right? So you have a lot of, large funds, hedge funds, proprietary funds, sovereign funds, just, asset managers. And basically, a lot of them are at a point where they need to be not underwater on very large trades. Now, a lot of times it has to do with options, right? And so the way options work is that you're buying the right to buy or sell a security. And so you have effectively a way to control a very large, excuse me, a large amount of money with a small amount of money. And that being able to buy or sell that security is going to occur at a certain price. And as long as security matches that price, then you are what's called in the money. And if security does not match that price and you are not in the money, then you can lose a lot of money. And the big boys and girls will play very oftentimes in options and futures. And pretty much that's just the way that works, right? Of course, they're probably playing everywhere, spot, you name it. But when the options expire, and they tend to do so, even just the monthly options, but you have the calendar year, you got a lot of things ending right now. Plus, not so much this year, I don't think, but you have what's called tax loss season, where if there is an underwater trade, then companies will actually be happy to take that trade and take the loss so they can market against their taxes. If they know they're underwater a certain amount, they do the math and they figure, well, yeah, let's go ahead and exit this one. Like they might hold it, it might go up, like they might plan on it going up later, but there is that whole thing going on. So just a lot of weird things happen with price this time of year. A lot of strange price action. And so what we have to do is beware of such things, right? We have to watch out for chicanery this time of year. Just is what it is. I know in the news right now, there's not a whole lot going on. Let me go ahead and share the screen here. And then look, if you're watching this on YouTube, by the way, like, subscribe, follow, hit the notification bell. I'll do all those things, right? Because that does help us out, in the algos, in the algorithms. And of course, if you're on X, follow me. We do this 5 days a week, and sometimes I even pop on during the weekend. And because like last weekend, I saw what trade was it? Was it Solana? I forget which trade it was. I think it was a Solana trade, and we knocked that out of the park. I freaking killed that. And then there was also a Bitcoin trade that I went live and talked about, and then it literally went straight to target like a few minutes later. So we do that, and that's on X, and X will notify you, and so will YouTube. So if you are into trading and you like to see somebody take trades and take trades live, then go ahead and follow us. So you see just a euro trade here. We saw I took this trade this morning. It was like a multi-day breakout, pretty bullish formation, kind of almost, not quite, but kind of almost like a rising bullish rising triangle, right? Bullish ascending triangle, almost like that. But it was a multi-day breakout with higher highs, or higher lows, I mean to say. So that being the case, it broke out, went up nicely overnight. Things are slow right now, so it just kind of inched up the whole night, but it inched straight up. And then this morning, as I was watching price, it actually, see that big wick right here, this candle, this big nasty candle down, it got crushed back upwards, right? So with that kind of being crushed back upwards, that actually kind of has some implications that we'll talk about here, with like the interest rate and things like that. But long story short, the dollar is weak right now. That is the case. We'll look at the dollar index, and we'll see if we can interpret some of the things that are being said by the Fed and whatnot. But here it is, just the euro being pushed up, and I can almost guarantee you if I overlaid the Dixie on this, it probably has to do with dollar action and not so much with the euro. See if we can define that. Yeah, pretty much. Let me see. I'll change just the candles. It's not usually what I do, but I will do it in this case. Let's do hollow candles. Yeah, it's literally dollar action. See how this mirrors that? That red candle looks just like the blue candle. It's very little to do with the euro. It's all to do with the dollar index, is what it looks like, right? So, it's just, I don't know, maybe it's end of the year dollar madness, but I can tell you that this pop up and then that quick move back down and then a bounce off the top of there, that's indication the price will continue. So I went ahead and took a trade and put my stop loss below this springboard candle right there. That what would this be, a hammer? I guess we'll see. I guess if price goes up afterwards, we'll see if I'm right. I even took this little tiny trade because the algo's lined up, and I was able to take this little trade with like 13-to-1 risk to reward, and it was on for about 3 minutes before that trade went kaput, which is fine. For the little tiny bit of money on there, I didn't mind that. It was like risking, $100 to make 1,300. Like, hey man, just, who cares? Even if you don't have that much money, throw $25 at it. Whatever your number is that you're willing to just kind of throw away. But $25 to win 350, it's like, hey, why not? We got March in the house. March, thanks for coming. Let me see who else we got. Let's see if anybody's in the private chat. Jamman is in the private chat. Listen, if you all are in the Algo Factory private live lab, come over to YouTube, support us over there, please. Let me go ahead and see if I can grab a link for that. Like I said, we are going to take a look at, let's see, copy the link. We're going to take a look at some of the, how do I say this? I don't know, some of the things that they're saying about what's going to happen with the interest rate, right? And with what's happening today with the dollar, I don't know that I would get too crazy with that. Again, it might be an indication that, it might be an indication that we're seeing the effects of, hey, we might cut rates, but a lot of people don't think we're going to actually see a rate cut until maybe like halfway through next year. Like Bostitch from the Fed, that's definitely Bostitch's opinion here. Okay, let me just copy and paste the link over in YouTube. Okay, cool. So let's get into the chart here. But you can see, even as you watch, you can see like the dollar is just kind of, the euro wants to head up. It's just kind of taking a break here. But that long wick right there is a very bullish thing. That's especially after a breakout. You got to break out of a multi-day, pattern with higher lows like this. Bam, bam, bam. So that's the trade. Let's jump into what might be happening with Powell. Where is my news here? I got a Forbes article on Jerome Powell. And it said the Fed funds rate, let me zoom this in a bit. The Fed funds rate is expected to decline by the end of 2024, but not much and largely later in the year. That's the current expectation of both policymakers and markets, even though the Federal Reserve could still raise rates one more time in 2023. And this is going back, this article is in October. Okay, this is a little dated, but it's still legit. The markets remain somewhat ahead of the Fed in the magnitude of the potential 2024 rate cuts. Okay. It is talking about there's a 1% decline, maybe by the end of 2024. That's what the markets were expecting. Now, the Gorilla has a little bit deeper information on that. And he has given us some information inside the private Algo Factory lab as to what he thinks is going to happen with the Fed funds rate. And let me explain to you, first of all, the way this works is that the cheaper money is, the better things go. Okay, so when the interest rate is low, then it's easy to borrow money. And pretty much all of your big money going into like stocks and stuff like that, that's going to be, I'm guessing, 95% borrowed money. That I'm not sure what the percentage is, but there's a huge amount of money from at the institutional level that's going to be borrowed. A lot of it's going to come from 401k contributions. I don't, maybe not 95%. I don't really know the number, but I will tell you that stocks are vastly, like especially blue chip, large companies, Apple, so on and so forth. A lot of those go up based on the ability to borrow money against your corporate bonds. Apple is one of the most leveraged companies out there. What they've done is they issue corporate bonds. And then last I looked, and this was like a year or two ago, Apple had over $1 trillion, I think, if I'm not mistaken. I have to look that up. It's a massive number, but whatever the number is, they have borrowed so much money to prop up their stock price. And when your stock price is propped up over years and years of borrowed money, it is severely affected by the interest rates. Okay, so when they're talking about interest rates being cut, what that's going to mean is that it's going to be cheaper for large companies to borrow money to prop up their stock, right? And it's going to be cheaper for large players to borrow money to buy stocks. So, for example, the ultra rich people, they don't necessarily liquidate their stocks. They will, but a lot of times they simply put their stocks and their equities and the rest of their assets up as collateral for what ends up being very, very cheap loans. And then they use that to buy more assets, right? They just leverage their whole book. Now, when the market goes down, that's a problem because people's collateral goes down and their ability to borrow goes down, and then everything stops. It's like putting a magnifying glass on the whole problem. So, when the money gets cheaper, it's easier to borrow, everything goes up, and that's like putting, turbo boosters on the market because everything works on debt, right, in the end. And of course, there's the rest of us buying money with cash or buying stocks if you buy stocks with cash and all that. And that's, that gets boosted too, because when the big money in the borrowing goes into play and the stock prices go up, of course, everybody else is like, hey, I want to get in. And then it's a positive feedback loop. So this debt kind of positive negative feedback loop that is basically magnifying everything. That's how the whole system works. And right now they're talking about Fed projections, and I'm going to go back to the article here. The Fed's own projections is shared in the summary of economic projections on September 20th. See short-term rates around 5% at the end of 2024. As such, most officials see rates declining, but on a slower trajectory than fixed income markets currently project. Okay, so a lot of officials actually are on the conservative side when it comes to the rates dropping. Okay, they're even talking about a final rate increase, but we knew that didn't happen, right? There was a Fed pause. And by the way, this article is very interesting because up until December, or up until the December Fed, Powell was talking about like, hey, we're not ready to start talking about cutting rates. We're not ready for it. And the whole market was like this article, which was kind of more of a hawkish look, like, hey, we might even see a rate hike in December. Well, what ended up happening was right up until the hike, like 2 weeks before the hike, Chairman Powell was talking and saying, hey, it's not time to talk about cutting yet. And then all of a sudden during the Fed, the FOMC a couple weeks ago, Powell's like, hey, we need to start talking about cutting. And the market went ape. The market really just, everybody aped in, if you want to say it went ape. I mean, it went crazy. Gold went up, like stocks went up, everything kind of went up. Now there was a point there, and we'll take a look at the S&P 500 where everything kind of puked out there towards the end of the year, just like last week. However, it did kind of get held up. So we'll look at that. Let's look at a dot plot here. Let's look at the Fed dot plot. I'm going to sort here on the articles for past week. 12/22, the Fed dot plots. And this is a really good article, I can tell, because, I mean, Forbes is pretty decent, but this cautionary tale for interest rate fortune tellers, right? And this is probably going to have to do with what I just talked about, how everybody was talking about, the possibility of like another hike, and, they're not going to cut rates very much. And now here we have as of December 22nd, just a few days ago, What does 2024 have in store for us on the interest rate front? Will interest rates stay elevated or decline? The consensus is the rates will decline. However, investors should be cautious about relying on such forecasts because predicting interest rates is fraught with difficulty, which we just saw. We saw everything like the worm turn last minute in December, right? Powell was not talking about cutting, and then all of a sudden he's talking about cutting, right? And there's probably some political pressure behind him. You got an election year, they want to have the market go up, things like that. It says here 4 times a year the Fed publishes the predictions of the 19 participants on its Federal Open Market Committee, FOMC, right? These predictions are commonly displayed via a dot plot, where each dot represents an FOMC participant prediction of the Fed funds rate at the end of each calendar year. So let's actually skip, if we can find the dot plot. So what they're looking at here, this is an older dot plot. And what they're doing is all of the different individuals who make the decisions and have the voting on what happens with the interest rate, they kind of place that in here in like a predictive kind of sort of way. Okay. So 2023 Fed funds rate, target rate 2023, is here now. What they're looking at is raising the target rate, right? And look, the Fed funds rate ended much higher than the target rates. So you can see the FOMC forecast year-end Fed funds rate at the end of the year. These are the forecasts, and then this is the reality, the yellow dot. So now we have a forecast that is much higher than these prior years. But look at these prior years. The actual reality was much, much higher than the forecast in the dot plot. And I know a lot of people looking at dot plots and they're all like, oh, the Fed expects this, the Fed expects that. Well, look how far from expectation this is, right? So, and this article is really good. Again, it's a cautionary tale. It's don't rely on these fortune tellers. Don't rely on the dot plots. Don't rely on all this stuff because policy can change really quick. And I guarantee you, I can all but guarantee you, the Fed's not just like making decisions based on data. I mean, they are. I'm sure they are. But I can also tell you there's political pressure behind the scene. There's the BIS telling Powell what to do. I mean, I guarantee you everybody talks, but in the end, someone probably walks up and says, hey, this is what you're going to do, right? And this is why we end up with what we end up with. And plus, 2021 was a great year. Like that one was as expected. Everything was going up. They had pumped a bunch of money into the market, but, you started to see the inflation problem, right? So, and the inflation was, that might be the reason why this all happened. But long story short, this is what happened versus what was supposed to happen. Yellow dot reality, blue dot forecast. So how far different will the blue dots be to the yellow? That's going to be the major question. And then I just explained all of that. So let's see here. Okay, so yeah, remember they were talking about transitory inflation. So Powell's talking about how, yes, inflation is transitory, it's going to go away. And they stopped talking about that. They're like, okay, we're just going to hike rates. Like we have sticky inflation, right? That's kind of the term that was being used. It's sticky. We got to unstick it, right? So dot plots here, they're kind of projecting rates around this kind of 2.25 to 3.75. And who knows, the actual reality of the situation might come closer to where the projection is. It might be that as time goes on and more data comes in, all the members of the Fed are able to kind of have their estimates be closer to reality. The market is a living, breathing thing, right? So you can't just, estimations are estimations. That's how that works. And then, so anyway, these are the dot plots. That's what that is. And the whole thing is that the whole point here is that we do expect like some cutting next year, but we cannot rely too much on the estimates of these people. All right, cool. So we have enough time to take a brief look at the trade I'm in. And of course, we're getting a pullback, which is lovely. So that pullback, we'll see what happens with it. If I can get a nice pullback, and I did enter a pretty small trade here. So if I could get a nice pullback, let's fix that and delete that. I will go ahead and enter a second entry on this. So, and I'm expecting price to kind of pull maybe this, right? So if that's the case, and it may not go this high, that's fine, but I think it will. I mean, my target's up there. On a high time frame, this is what it looks like. So if I can get a nice pullback, I may enter, it'll probably be the same size trade, but just with a much higher risk to reward on that. So, we'll see. We'll see in the market catches. I'm imagining it'll look something like one of these pullbacks here, but it might not go that far. I mean, if it goes as deep as these or a lot deeper, then my thesis on the breakout is wrong. It means that this wasn't a breakout. But I can tell you chart wise, it's a breakout. It's a breakout of a breakout. You had this higher time frame kind of move here where you're going back to earlier in the month. And again, how does this relate to Powell and all that? Well, this is traded against the dollar, right? So right now, all the talk is that we're going to see cuts in the dollar. Well, if the dollar is going to get cut, then all assets traded against the dollar are going to see a boost. Now, if the asset itself has some kind of fundamental issues, the asset will not go up. But the average asset that does not have fundamental issues, or at least is nominally okay, those assets should continue to rise. And the euro against the dollar is a perfect example. It's a very liquid pair. A lot of people don't like to trade it because of some of the liquidity grabs that happen. But if you know how to play those, you're good, which is exactly what I've done here. I took a smaller trade, right? And now price may go down and grab that liquidity. But as the cuts next year talk is going to keep happening, as Powell keeps talking about cutting rates, you're probably going to see a lot of these, like you get this pullback and then a monster push up afterwards. And that's pretty much what I think is going to happen. And if price doesn't go that far down right now, if it just is kind of playing around and only maybe does something like this, I'm not going to put any more money on this. Probably not. Now, what I may do with this trade is I may simply push up, pull back a little bit. And if it does do something like this, even if it's like a little bit higher up like this, something like that, then I may end up, depending on what the charts say at that time, I got to read the charts at the time, but I may end up taking a nice tight trade in this area with the same target. It may be a smaller trade adding on, but it might look something like this, something like that. So it's just, again, it's going to depend on price action. Already the pullback that we're seeing right now is almost completely eliminated. If you look here, see, there was a nice pulled back pretty hard. And then now it's just like already back up to entry. So it really, now I'm in profit. I mean, this is a very, very bullish market. So I think a lot of the Fed rate cut talk is just bullish, bullish for stuff. Like, for example, this morning I got into a short thinking that this was going to go down. And as it did, it went against me and it popped up really hard and I realized what was going on. So I got out of that and then I entered a long and got my money back and then some, because that's the way my algo works. I can actually play that. I can go, if my algo is so strong that if it goes against me in that manner, I know that if I go against it, then I'm good to go, right? So technically, I could take a wacky trade right now. I'd have to look at the algos, but it looks like I could enter here with this pretty tight stop below this pullback. That's a possibility because it looks like it's about to rage up. So, for those who are in the kind of risk loving, group, that's one way to go. Just throw a small trade up there like that with a 4.7 to 1 risk to reward ratio. Beautiful trade if that's what you want to do. Again, I'm not, getting no investment advice here, folks. It's all just charting, right? So it's all just talking about charts, but that is it. That's what I'm looking at from a trade. And again, that's going to affect things like Bitcoin as well. Right now, Bitcoin has been heading up very powerfully. So it's taking a bit of a break right now. I called this move down beautifully. 41,300 was the target on that. And if you've been watching like in the last couple of days, just go back the last couple of lives. It's on X. It's also on YouTube. I called it out live. 41,300 was what I was thinking might happen. And it looks like perhaps it went not quite. It got front ran. Other people took that. And I'll just do a quick liquidity look on here just to see where the targets might be. I'm going to go to kingfisher.io. If you are a crypto trader, this is a great platform. I have a link to this and it will give you a discount. I believe it's in the description. So you can use my referral code It's if you don't want to pay for it, you can get some minimal functionality and just spin the wheel like I just did. You get free credits if you get free credits. And then you can look up these liquidity nodes. And you could go back to my past shows to understand how this works. I talk about it all the time. Right now, the closest liquidity is sitting at 44,000 and all the way up to it. So it would not surprise me if the charts favor a move up in Bitcoin to see price kind of head up to 44,000, just grabbing liquidity pretty much like this. That would be an expectable move right now. Let me see. Oh, this was a beautiful head and shoulders that I missed. Oh man, where was I on this? I was asleep. But check this out. Watch this. This would have been a great trade to catch had I not been, like a normal human being and slept for my average 4 or 5 hours a night that I sleep, because I'm just an animal when I work. So look at this head and shoulders. Holy moly. That downward slope on this head and shoulders bottom, that's what you want. That's beautiful. Like I said, had I caught this, the targets would be here. We would have taken profit, we being me, would have taken profit here at 43,000. Next target right in this liquidity, right at 43.4. So literally where I just kind of drew my line. This would have been a beautiful trade. Let me tell you what this trade would have looked like. This trade would have been, I would have taken it at 11. Actually, I was up. Shoot, I was awake, but I was like trying to go to sleep. I probably would have taken a trade that looks like this. So I would have had a 6-to-1. At the very least, I would have had like a 2.5-to-1, 3-to-1, something like that, if I was using this right shoulder as a stop loss. But I probably would have been tighter than that. And also, had I added to it on this pullback, then I probably would have been sitting a nice 5-to-1. So yeah, maybe even better. What a missed trade! What a missed opportunity! But I will say that there might be an opportunity. I know I'm going over a little bit here. It's already 7. I'm going to flash up a QR code in a few minutes so you can find out how to get to us. Of course, if you're watching us on YouTube, do not forget to like, subscribe, all that kind of stuff. Follow, notification bell. On YouTube also is our website. On Twitter is our website. Come to our website, check us out. In the meantime, let me show you a trade that is a possible trade. I'm not saying I'm going to take this trade. We'll see. Hold on. Let me just take a quick look. I can tell you the algos are not lined up yet, but I think the algos will line up for this trade. Let me reset trading view really quick. Trading view is just a little bit glitchy right now. Not bad though. I love trading view. Trading view is the best trading software I've worked with, and I've worked with a couple of different kinds. It's just there's a free version of it. Like if you want to start trading, you don't have to pay for it, and initially, but when you do start trading, it's a really good tool to pay for. So I'm expecting, look, the way that this trade might go, and again, the algos have to line up. It's not quite there. This may just do like I drew, or perhaps it might flounder a bit. Who knows, maybe something like this, but probably not. I'm guessing it's going to head up like this. It might even do faster. It might do a lot of things, but I do think that a good trade might, I'm not in it yet, but might look something like, what do we have our liquidity at? 44,000. So maybe I just front run that just a hair. Let's go down to like 43.8. So something like this might be a good trade. Again, my algo is not lined up for this just yet, but it's an extension. It's a pretty big extension from this head. This trade has nothing to do with the head and shoulders. Like that's over for this trade, right? So we'll ignore that for now. It's purely algo based, which is why I think there might need to be a bit of a pullback. But with Bitcoin being Bitcoin, it may not have a pullback. So the algos line up. I might take this trade like right there. It might be something that doesn't happen until here or there or whatever. But this is a basic idea of a trade that could be taken. So just two freebies for you. There's the Euro trade, which my group saw earlier. before before this show. There's this Bitcoin trade, and again, it might do just what I'm drawing here. Might go down a bit. Might get a better entry. Algos have not lined up. I cannot take this trade yet, but that's something like this is what I'm looking at. Anyway, let me go ahead and flash the QR code on the screen. Visit us, like, subscribe, and join us every day, Monday through Friday. We do this. We do it for everybody here. And look, this is what we do at Algo Factory, right? We help people become traders. We can start you from scratch. If you are a new trader, you've never traded before, that's totally cool. We'll go ahead and show you the basics, and you'll do a lot of self-study. We have an entire university, and then what we'll do is we'll help you build a trading method, which is otherwise known as an algorithm. Okay, so people hear the word algorithm, they think you have to know how to code, they think you have to be like a genius or whatever and have a supercomputer. None of that's true. An algorithm is just a trading method. Anybody ever who has traded successfully, I can all but guarantee you, is using some form of algorithm, because an algorithm is just a process. It's just like, hey man, A, B, and C happen, so you take actions 1, 2, and 3. That's all it is. Okay, now if you do want to code your algorithm and have it trade for you, we can put you on the path to do that as well. Okay, so basically building an algo, if you know what you're doing, you can build an algo that is designed to be coded, which is something I'm pretty good at. So we can go ahead and work with you on that. But either way, come visit us, zap that QR code, come to algofactory.tech. We hope to see you in there. And we are out of here. I'm going to go to the private group. The private group will be on for another hour. As long as there's something to talk about, there's always something to talk about. So in the